Hello, everybody. Hello, fortune builders. Hello, Not Your Average Investor Show community. Welcome to a special webinar here between fortune builders and JWB, a tradition as old as time. I'm your host, Pablo Gonzalez, for this webinar. You all know the man across the screen from us here. He's the head of the Passive Income Club. The guy's in charge of billions of dollars of real estate and big time decisions. And more importantly, he has helped thousands of families create a financial future different than their past and reach their objectives and have a great retirement and retire their parents and do all this other cool stuff. Hall of Fame guest over here, Paul Shively. Welcome to the webinar, my friend.
Happy to be here, man. Feels like home. Every time I get to hang out with you guys, I always say it. It feels like coming home. Got very, very Masters vibes from like,
you like that?
You know, a tradition as old as time, and I'm Jim Nance. I was like, oh gosh, I'm getting the warm and fuzzies. Well done.
I feel like I'm here with a couple masters of real estate myself. So, I feel very Jim Nancy. But speaking of the other master of real estate over here, he's the guy that I host a weekly podcast with. That's the least of what you must care about here. More importantly, he's the co-founder of JWB Real Estate Capital. Been around for 19 years. A billion plus in real estate, 20 city blocks of downtown Jacksonville, 6,000 properties managed, and 125 folks here in Jacksonville, Florida. And you win Best Places to Work awards. What else do you want to talk about, Greg? Gregg Cohen, co-founder of JWB.
Thank you. It's great to be here. I mean, I think another stat that is super important, maybe the most relevant for everybody here, is the almost 20-year relationship we have with fortune builders, right? The very beginning of real estate career for me, even before fortune builders was an entity, back when it was just CT Homes and they were doing all these wonderful things that they teach thousands of successful investors to do. That's when my relationship started with Paul Shively, with Than, with Paul, with Conrad, with that group of special individuals. And it's been almost a 20-year relationship now. And so I'm with you, Paul. We get together every month. We get to do this. We try to drive as much value as we can. And it's like hanging out with friends. Dare I say, hello, friends from Jim Nance, right?
Hello.
Get to hang out with a bunch of friends and learn a lot of really great stuff.
I don't watch golf on TV, so I wouldn't have caught that reference. But the stat that I care about is this kind of collaboration between fortune builders and JWB. And what JWB has been able to do here has been able to deliver $305 million worth of profits to investors that work with you. We've got an active community. I'm one of these guys. I'm one of these guys over here with a 100K plus profit client, the 767, hoping one of these days I become one of these 3, almost 4 with the 2+ million. But that being said, we're not here to talk about them. We're here to talk about markets. GC, why is it so important? Why did you nerd out so hard on this finding the best market for rental properties?
I did. You remember that when I bailed on our morning run we were supposed to do because I stayed up till 1 o'clock because I got super excited about adding a little more to this presentation.
I remember that.
Well, here's where it came from for me, guys. So I've been blessed to be in real estate for almost 20 years now. We celebrated our 19th year anniversary earlier this year at JWB. I own 400 rental properties. I manage over $1 billion of single-family rental property portfolios across the country, of which you're a client. Paul Shively's a client. We have a lot of mutual clients. But I have seen how it's done really well, and I have seen how it is done very poorly as well. And so my passion for being here today, thank you very much, Maestro. My passion for being here today and for putting this together is coming from the place of like, man, if you're an everyday investor just getting started here, you're hearing a lot about how to do it wrong. You're focusing a lot on the wrong things. And just one switch to the order of operations and just one session on understanding how to find the best rental market can be everything you need to do it right. To do it like you're doing it, to do it like Shively's doing it, to do it like we as a company have helped over 3,200 properties go into the hands of successful clients. It's really about the simple things. And so one thing that investors do wrong is they focus purely on the property. They spend all of their time on the property. They don't really pay attention to the market, and they don't pay attention to the team. And if you hear nothing else from today's presentation, I want you to flip that on its head. I want you to focus on the team and, of course, the market, right? The team, you're in the passive income club. You have access to the best team here at JWB as well. But let's focus on the market next. And so much of what we can help investors do is how to analyze the right market. It literally translates into millions of dollars by choosing the right market. And I get to see it on all the portfolios that we get to manage. So I'm super excited. We're doing a deep dive. This is the deepest dive I have personally done on the data. It is all recent. We looked at all 99 metros across the country, and I get to share all of that data with you here today to help you become more informed, especially if you're on the fence of making your first investment. This is a perfect session for you all to be here. So, Shively, I don't know if you can tell over here, but I'm a little pumped up. How about you, brother? What are you excited about?
I love it, man. I love hearing it. That's why I love having you. It's why specifically I wanted to bring this message that you really, again, you joked about it, Paul, but you really are an expert, right, on. And that's why I wanted to bring that to the Fortune Builders group, to our group, right? My job is to help shepherd, help grow, help get education into the hands of all of you on the phone. You know, the 100 plus, 200 plus people on the horn right now who are taking time out of the middle of your day to become a more educated investor, to help make you make better decisions so you can eventually achieve your goals. And that's what this is all about, right? And one of the couple things you said, Greg, and I'll make a couple points of why this topic is so important, specifically for my Fortune Builders people, you know, is everyone who, you know, kind of outside of this group, who doesn't have the education we have, doesn't have the tools that we have, doesn't have the mindset that we have of how to invest. Not just to invest, not just to buy a house, to say at the water cooler, we're buying a house, but it's outcome based. It's goals based, right? If you listen to what I talk about, what I've taught for, 15 years now, that's why I have no hair, right? Like 15 years plus of investing and also educating this mastery community is exactly what Greg just said. Instead of an inside out approach, right, which is the house first, and then you solve everything else. How we do it in the mastery community, what we've been educating you on, if you listen to our rental property bootcamp, I've been saying this again for 15 plus years, it's an outside in approach, right? Most people who don't have this education, who aren't part of mastery, they focus on the house first, like Greg said, and then they try to make everything else work, right? Oh, John said this is a good market, or my uncle or my cousin or whatever, or I can go see it. It's in my local area. Oh, the numbers really work. And we get that phone call all the time. And what we say is slow down, go outside in. And that's what we've done over the last couple of months, right? So whether this is your first webinar with us, welcome. I'm happy to have you here. Or whether you've been with us for the last 4, 5, 6 months as we've been doing this, what we've taken you on the past couple months is a very intentional journey. We started with it's outcome-based investing. And Paul, if you want to flip through slides as I go, great. If you don't, all good, no worries. It's outcome-based investing, right? We're not just investing to invest. What we're doing is matching our investments with our goals, right? So we get really, really clear on what our goals are. We did a whole 45-minute show just like this on that. If you haven't watched that, we can put the number up. We can put how to get in touch with us. Text us, email us. We'll get you that recording, right? You can talk to someone at the Passive Income Club and we'll get you that recording to help you walk through, hey, here's exactly how we talk about creating goals and why that's so important, because we want to make sure we're investing to match those goals, right? Then we did last month's webinar on exactly what Pablo's talking about. Hey, how can one house start to hammer down some of these big problems? We did it the power of one house. How can we solve through financial engineering, which is exactly what Pablo's just showing, how can we solve healthcare costs for you? How can we solve a retirement cost for you? How can we solve a sending a kid to college cost for you, right? How can we solve with one house these type of problems? And that's what Passive Income Club is all about, is financially engineering your portfolio to hit your goals, which is what I get out of bed for. Like, Greg, you're more in the data, which I love, which is why this is so a good yin and yang, right? Because I love the financial engineering side of it. If you tell me what you're trying to do, and you tell Greg's team what we're trying to do, and you tell someone on the phone with JB, what in the Passive Income Club, what are you trying to do? We can help solve that to get you there. So that's the frame of why this is so important. But as you're about to see, and I'll let Greg kind of go through it in more detail because he's the expert here, the data is overwhelmingly clear. To hit a majority of our goals, right, we need to capture the widest swath of how real estate makes you money. And very bluntly, even my own perspective has shifted. I used to be very one profit center focused when I was younger. I wasn't as educated as I am now. And now that we've got, and Greg, I think you showed it there, which is great. You have $300 million of profits that you've created with clients. That's a data point we have. You have 3,000 plus clients, I believe, right? It's a huge data point, right? So we have 3,000 plus clients. We have 3,000 plus portfolios. Greg, how many houses in total have you managed? Roughly, it's 5,000, 6,000.
Yeah, exactly.
Right. So the data set's kind of irrefutable. Okay. The main take home point is a majority of that wealth is created from one profit center, right? Which is the growth of real estate over time. The cash flow is great, but this is the main point. If you go outside in and you have these goals, you need to understand, well, how is a majority of money made in real estate? So I can then invest the right way to match to those goals, right? So Greg, this is where I'll slow down because I just want to set the frame and say, hey guys, this is why what Greg's about to talk about is really super important. Because if you understand how majority of the money is made in real estate, it's by the growth over time, okay? Then you can pick the right market that helps you achieve that. And that's what Greg's going to go through for the next 30, 40 minutes, which is what we talked about in that email when we sent you.
Indeed. And just to clear some stuff up, because people are already asking about it. How do we get this presentation? How do we get in contact with JWB? All these different things. This is a part of your passive income club experience. Hopping on a call with JWB is something that you have already paid for. And what they do is they build out these plans for you to match your outcomes and help you visualize exactly what it would take for you to reach these goals, whether it's pay for college for your kid in 15 years, or it's retire in 30, or whatever, sail around the world, whatever you're trying to do, take advantage of this because that's what JWB does. They consult with you, they figure out your why, they create a plan for you, and then you're able to understand how you reach that plan. And also, I went through these past slides because if you just text this number, 904-293-0341, we'll send you the presentations, the past presentations. We'll send you this presentation so you can see a whole bunch of data. Something we've learned doing these things is nobody looks at screenshots, right? So save yourself the time of taking these dumb screenshots that you're never going to look at again. Just text 904-293-0341. It's a text-only number, so if you call, you're not going to make a new friend. But if you text, you will, and we'll send you these this presentation. So that being said, GC, when you are looking at what is the best market for real estate, what's the number one thing we need to understand for that first?
We need to understand how that market is going to make us money. And I think it all starts with a basic understanding of how real estate pays you. Because when I look around, and I've been on the stages at Fortune Builders many times, and on many other stages, spoke to thousands of investors in my career. One thing definitely stands out to me. It's that people generally think that real estate only pays them one way. They lack the understanding about how real estate pays you. And because they only understand one way that real estate pays them, they are apt to look at lists or emails or blog articles or talking heads that say, this is the number one reason to buy here. And if you lack the understanding of the 5 ways that real estate pays you, and you only think it's one way, and that one way is at the top of that list, you might make that decision to go invest in that market. But today, we're going to start just like Shively talks about here. We're going to talk about big picture first, because if we have the big picture understanding of how a market makes you money, then we can then find the information that is going to make us go down the path of benefiting from all 5. Okay? So long story short, I know we won't have enough time today to go through all 5, but again, just reach out to our team. We're happy to give you all this information as well as any of the previous trainings that we've done on this. But these are the 5 ways that real estate pays you. Right? You've got net rental income or cash flow, which is the way that most people think about buying a rental property. They think about cash flow, which we love cash flow, but guess what? There's 4 other profit centers too. And they are tax savings, principal pay down, which is your resident paying your loan down for you, home price appreciation, and inflation hedging and inflation profiting. So now that we have the understanding of the 5 ways that they pay you, the question you should be all asking yourselves is, what makes me the most money? Which of those profit centers makes me the most money when I buy and I hold onto a single family rental property? Pablo, you've been alongside me for 5 years now talking about this.
Yeah.
Do you feel like most people have an inaccurate understanding of which one makes them the most money or which is the most impactful?
You know, the answer is I don't know, but what I do know is that I don't think they understand just how impactful understanding that piece is, right? Because we do this thing where we go through investor after investor, we go over their portfolio, we lay it out on a pie chart just like this. And what you always see is a very similar pattern. It's this idea that home price appreciation, this green part here, makes up the majority of it. We call it the Pac-Man principle because on a pie chart, it looks like the Pac-Man itself and everything else is just the mouth of the Pac-Man, right? So you see this, these are multiple clients across the years. We've done probably 50, 60 of these at this point, GC.
100%.
And you just see this over and over again. And when I got into the space, all I heard about was cash flow, right? Like it's really all you hear about. So it's like this idea of maximizing the biggest profit center, maximizing the pie is has become very clear to me.
And it's important to note that it doesn't matter when you started to invest. That's the benefit of working within the Passive Income Club. We manage over $1 billion of real estate that has been purchased over 19 years. And it doesn't matter if it was purchased in 2006, if it was purchased in 2012, if it was purchased in 2019, if it was purchased yesterday. Over a full market cycle, you consistently see that home price appreciation accounts for 60 to 80% of your total wealth pie. So the question to all of us is, if we know from doing this work and committing ourselves to managing billions of dollars of real estate out there, why do investors not pay attention to the biggest contributor of their wealth? Why don't we focus on home price appreciation? And the reality is that people don't understand it. So I'm so glad that people are here today. Where we are going to go from here is we're going to talk about the best market to invest in. And the best market, the decision that you make for the market is going to determine your long-term growth. That is going to determine the home price appreciation component of the Pac-Man. But there are a lot of misnomers. There's a lot of misinformation about what makes the best rental market. And that's why I'm excited to peel back the onion a little bit and put on my data nerd glasses here and assume that role, because I think the data wins here. It's going to help you win in rental property investing.
Love it. Paul, you got anything to add in here, or should we just jump straight into the criteria that Greg dove into for hours on end to make this presentation?
Let's get to the meat and potatoes, baby. I love it.
Let's go. All right, GC, lead us through this.
So as I was slaving away late night and putting this together, I really wanted to put myself in the position of somebody who is just now working up the courage to say, hey, I want to invest. And they may not have access to all the experience and information that I have or that you have or that Shively has, but it's like the everyday experience right now. It takes a lot of courage to say, I want to invest in a rental property. What might I be looking for? And these are things that might be the things that you look for right off the bat. And so I said, okay, let me scale those down and tell you what the 7 criteria are that are going to help you win in investing. And then I went and I looked at all 99 markets across the country. These are the top 99 metros out there, the top cities out there. And we're going to go through and we're going to rank them based on 1 to 99. Where do these metros fall? And so these top 7 criteria are important. They're important to understand, and the order that they are in is important. So we're going to start right off the bat. Number 1 would be rent to price ratio. This is the amount of rent that you get on a monthly basis compared to the to the purchase price. Then we're going to look at population size. We're then going to look at home price appreciation rate. And this is over the long haul. We are not just taking the last few years of home price appreciation in a market. We're going over 40 years and we're looking at those markets. We're then looking for rent price appreciation, again, over 40 years, because we want to see what is that market producing over and over and over, cycle after cycle after cycle, so that you can win over the next cycle. We're then going to look at population growth. We want to make sure population continues to grow. We'll look at median income growth. Again, median incomes growing are important so that folks can pay rent and continue to pay rent, and homes can continue to be affordable as home prices and rents go up. And last, we're going to look at median home sales price. That's going to affect our budget for getting into the asset. And it's certainly something that we all need to pay mind to.
Let's get into it, GC. I can't promise you that these are all in the same exact order that you just said, but I wanted to start with the biggest piece of the pie first, the home price appreciation part.
I think that's the most sexy one, right?
Right?
You know,
let's just get to it, man.
And I think this is pretty cool data for you all to learn. I mean, I love the data. You know, I'm the data nerd here, but you know, did you know that the highest home price appreciation market in all the land, all top 99 metros, is San Jose, California since 1982? You may know that, you may not know that,
Yeah,
right?
I didn't know that, but if I think about it over 40 years, it makes a lot of sense. Silicon Valley has done its thing.
There you go.
Yeah,
I think we would have landed somewhere around there, but now you know, and you may not know, but the highest average home price appreciate for the country is in San Jose, and that's 6.3% per year. So when we're thinking about home price appreciation and how to grow this wealth pie, you might be saying, well, listen, I'm going to go and find the best appreciating market. That may be the best rental market for me. And so hold that thought. We'll get to the punchline at the end here, but you might be looking for the home price appreciation winner, and that would be San Jose. Now, what's interesting to point out about San Jose is, I'm glad you put the cursor right there. The next thing that I want to point to is the rent to price ratio. What we know is that if you have a rent to price ratio below, say, 0.5, that means that you are going to be way cash flow negative. You are taking on a speculative play. You are going out of pocket every single month and hoping for home price appreciation. And that makes sense, of course, because if you look at the median home sales price in San Jose, as we all know, it's way up there, $1.8 million.
$1.8 million.
And then lastly, look at population growth.
Eesh.
Are people moving to San Jose? No, they are moving away from San Jose. So if we give a quick synopsis of the San Jose opportunity here, we see high cost, we see high risk, and we're not so sure about high reward going forward. We do love the home price appreciation angle, but there are a lot of concerns if you are thinking about putting your money in a rental property in San Jose that would probably tell you to go and look elsewhere because of the rent to price ratio and because of population growth declining.
Then let's look at high rent to price ratio, GC.
Well, I'm glad you asked. The highest rent price appreciation market in all the land would be Fort Myers, Florida.
Right down the street over here.
There you go. Well, you know, if you had asked me what's the highest rent price appreciation market in the country, I wouldn't have known prior to doing this stuff.
I wouldn't have said Fort Myers.
And certainly not over the last 40 years. But the highest rent price appreciation for the country is Fort Myers, and that's 4.7% per year. As you can see the U.S. average. You can also see Jacksonville's averages here if you want to compare. But that's really a nice 4.7% revenue increase each year on average. And again, that's about a 40-year data set there. So if we're thinking about rents going up, we like that. If we look at some other things, we see that home prices have actually gone up a lot in Fort Myers as well. It's in Florida. Home prices have gone up a lot in Florida over the last 40 years. And so we like both of those components. But there are some other things that don't cut it when it comes to a rental property market. The first thing is, what is the population, right? Shively, when you're teaching students and when you're holding trainings, what is the minimum population that you train on and teach where your assets have a solid economic and job base?
Yeah, I mean, if it gets below 1 million or so, it gets really, it just gets tighter. The further you go beneath 1 million and the higher above 1 million you get, it just 1 million's a nice round number to help people understand. And why, right? The whole thing, we're not just trying to throw data at you. Why? Well, you want to have a large enough pool of renters to be able to be in your assets to help pay for rent, to help pay for your mortgage, to help pay for this growth that you're talking about. So why is population growth important? Why is population density important? Like how many people are there? You gotta have renters. So you gotta make sure you have a wide enough pool, and you don't want to be above the pool, below the pool. You gotta have people, right? And at the end of the day, real estate's a people business.
There you go. And so, I mean, 1 million is what we collectively have been teaching on for, probably 10 years, right? I mean, and that was 10 years ago, 1 million was a threshold.
That's right.
In reality, it's probably a little bit higher now as populations have grown across the country. But, you know, it's not just 1 million too. You want to look at what jobs are there. So there are no Fortune 500 companies headquartered in Fort Myers, Florida. Fortune 500 companies are another easy thing to understand as to, are you directionally accurate for where you want to place your money in a market? And the other thing that I'll just throw out there is the median home sales price here is 400,000. That's pretty close to the US average. If we're looking for things that are likely to happen in Fort Myers in the next market cycle, we see that population is growing at a pretty high rate. It's about a 15% population growth over the last 5 years. It's pretty good. It's better than the US average for sure. What you would likely see is that population will grow, home prices will continue to go up, and the idea of getting positive cash flow at $450,000 for a median home sales price is less than what it is today.
Yep.
So there's a lot of good things to like about the Fort Myers market, but cash flow is tight today because of the purchase price, because of some of the insurance challenges that they've had, specifically being on the coast there as well. So when I look at this market, there's a lot to like here. But if your best chance right now for cash flow is probably today in Fort Myers, as you see where it's going, it's only probably going to get harder and harder.
Makes sense. So let's talk about that thing that tells us about cash flow, which is the rent to price ratio, GC.
Oh, I love this one because when I reference those lists that investors kind of cling to as like the best cash flow markets in the country, what they are in essence looking at is what is the best rent to price ratio market in the country. And the best rent to price ratio market is none other than Detroit, Michigan.
Detroit, Michigan.
The rent to price ratio is a little over 0.8%. Again, the bogey that we're kind of looking for is 0.5. So 0.8% is really high. It's the highest in the country at the moment. What that means is prices are low and rents are comparatively high. So do we like that as investors in a vacuum? Absolutely. We love cash flow, right? Cash flow is not everything though. So when we look at Detroit as a market, we need to look at growth. Now, the growth is the biggest part of your wealth pie. So we cannot fall into that trap of falling in love with cash flow because properties are cheap there. We will be leaving a lot of money on the table. And investors who invest in Detroit likely are doing the same. And the reason I say that is because look at the home price appreciation rate and the rent price appreciation rate. It is below the US average significantly for both. And that's just the US average. That's not a growth market. The US average is average. A growth market's appreciation is much higher. So you are leaving the biggest part of your wealth pie on the table and you're taking the short-term cash flow. But guess what? If we go back to that Pac-Man principle, 60 to 80% of the wealth pie comes from growth. So you're leaving a lot on the table. And oh, by the way, look at population growth. People are leaving Detroit over the last 5 years. That's not a good sign for the prospects changing of home price appreciation and rent price appreciation in the Detroit market. Shively, I want to get your insight here. This is a common question, like prices are really inexpensive in X market. Should I go there and follow the rent to price ratio? What are your thoughts? What did I miss there?
Yeah, I think this is great because I can see in the comments people are engaging and excited and have their own thoughts and have their own ideas. The beauty of this is it's data that spurns a lot of reaction. A lot of this is custom to you. So my thoughts are, and a lot of the answer to some of the questions down below is, everybody's a little bit different. And that's good and that's okay, right? In order to properly...
I lost Shively. I don't know if you did.
Oh!
Why does that always happen when he's about to deliver?
You guys got me? Am I back?
We lost you right when you were making the smartest point, I'm sure of it.
Gosh, I'm sorry. Well, it's custom to everybody, right? So it comes down to your goals. It comes down to why, again, reason we started 2-3 shows ago to go on this path of get really clear on your goals. And this becomes really, really clear, right? Where you should invest becomes really, really clear. So when I hear, hey, Detroit's this and Detroit's that, and Fort Myers is this. And it's like, okay, great. Those might be okay for a certain investor. But that's the point. As long as that investor realizes they are taking of that pie chart, the majority, 60, 80% of the pie, and saying, I don't want that, that's okay. Our job is to educate you on that. And hopefully in this group, you do want that 60, 80% because that's how majority of the money's made. Again, we're outcome based, right? Don't get lost in the data. And this is good. It's great data. I love the data. Pull yourself out and constantly ask, okay, why am I doing this, right? What's the goal? And then you match the data to the goal.
There you go. All right. So let's keep looking at a little bit more data and we can talk about these goals some more. So highest median income growth, GC, what do you got?
Yeah, you might be thinking, okay, where are incomes going up the most? That's wonderful for people to be able to afford the rent and for home prices to be able to go up today. And growing in the future sets the stage for continued positive returns on investment. And Stockton, California is the highest median income growth market in the country. Median income growth over the last 5 years of 32%. Comparing that to the U.S. median incomes grew about 13%. Jacksonville's cozy in the middle there, about 25%. So 32% over compared to the nation's average is quite strong.
Pretty good, yeah.
So we do love that. That also leads to an above average home price appreciation rate over the last 40 years. But what that also leads to is home prices being high, right? You're just not going to find a positive cash flow in markets that have a median home sales price of $500,000. Certainly not if you want this to be passive and done for you. So there's a challenge there on cash flow. You're back into that same kind of like San Jose conversation where it becomes speculative. You now are out of pocket every single month and hoping for home price appreciation. And that's not what our investors want, right? To your point, Shively, there are some where speculation plays really well, right? But in this market, right, the investors that we serve here are all about, hey, listen, how do I make sure I solve this outcome? How do I make sure I solve for retirement for me? How do I make sure I send my kids to college? They don't want to speculate. They want it to be paid for every single month. And that's what you would find yourself doing. It's going into that speculative play when you go into a high cost market like Stockton, California.
Okay, so let's look at another number one here, highest population growth, GC. What does that mean to you?
Well, I love population growth. Population growth drives demand for housing. It is an indicator of high home price appreciation and also rent price appreciation. And when we're looking at the highest population growth in the country, that's actually Myrtle Beach, South Carolina. Myrtle Beach's population has grown over 19% in the last 5 years. Again, to compare that to the U.S. average, it's about 2% for the U.S. average. So people are moving there. Something to pay attention to, though. Sometimes this is why you don't only want to look at one stat or one article or one headline. The population growth rate is certainly related to what the current population is. It is a lot easier for a low population to have a very high population growth rate, right? And a little bit of that is what you're seeing with Myrtle Beach. They don't have over 600,000 people living there. So don't fall in love with one stat. That's why we bring you all the stats and help you form your own conclusions. But a lot of people are moving there, and you're seeing that in high home price appreciation. That's also a reason why you're seeing home prices be higher than the national average there. So again, the chances of finding positive cash flow in Myrtle Beach, your best chances today, probably not going to find it again because it has a low rent to price ratio and a high cost of home sales.
Yeah, that makes a lot of sense. This idea, the idea of like a small population being this like risk factor, like Paul said, and then being able to juice the stats because a small change makes it look better than it is and stuff like that makes tons of sense. You see, so you've been through a bunch of these markets, right? What's the takeaway? What's the aha here?
All right, let's spend a few seconds here just taking off the data nerd glasses and just talk, okay? So what most investors do, because they only understand one profit center, they cling to one market. And they might think, if I can find the number one market for X, that's where I should go to invest. But I'm about to give you a counter way of thinking about things. And I think these numbers on this slide will help to reinforce it. Pablo, if you are number one in home price appreciation, that likely means that you are pretty high on home prices.
Yeah.
Where do you think that lands you on things like rent to price ratio or cash flow?
Probably not good.
Probably not good. You're at one end of the spectrum. And if you're at one end of the spectrum, you're probably on the other end of the spectrum for something that is equally or maybe more important, right? Let's take the other end of the spectrum. If we're looking at low priced markets and high rent to price ratio, which people tend to cling to in this space and say, oh, that's where I should go and invest. How do you think you're doing for home price appreciation rates?
Probably not that good.
Probably not that good. And so here is the big takeaway. It's that number one does not mean that you are number one. Riddle me that.
That's some Yogi Berra. That's some Yogi Berra stuff right there.
Number one does not mean you are number one. And here's what I mean by this. If you want to benefit from all 5 profit centers over a full market cycle, you are looking for that market that is above average in as many of these criteria as possible. And the reason is because these criteria all matter and they drive all 5 of these profit centers. If you go for just number one in one of these profit centers, you're likely leaving money on the table, a significant amount, and increasing your risk profile. So the big change and the big shift that I offer to everybody listening today is to look at these markets and say, which are above average in as many criteria as possible. That is what we offer to you, is the criteria, and will help you find the best market for you. So as many of you are aware, I invest in Jacksonville. I've invested in Jacksonville since 2006, and if you have been a part of any of these trainings, you have heard me talk about my love of investing in Jacksonville for almost 2 decades now. I own over 400 rental properties in Jacksonville. I've helped thousands of fortune builders invest in Jacksonville. It's the only market I invest in. So I want you all to know that. But here's the data that shows why I firmly believe that if you come and want to build an outcome-based investing program based on rental properties, that Jacksonville is going to deliver that better than any other market out there. It's because it is the only market that has 7 out of 7 criteria above average. And if you look at these other markets, it's not even close. 2, 3, 4 criteria. The amount of criteria you're not hitting there, that's just money that you're leaving on the table when you look over a full market cycle.
Yeah, and it's, I think to me the biggest thing is buy and hold rental properties when you're playing the passive game like this is a long game, right? Like I think fortune builder students, there's all sorts of different ways of doing real estate, right? Like if you're wholesaling, you're thinking about one thing. If you're flipping, you're thinking about another one. If you're, burring, you're thinking about a different thing. But, and most of the time you think of making your money on the buy in real estate. When it comes to buy and hold, you make your money on the hold, right? So this idea of having all these good features of a market that makes it for like a nice long relationship is kind of what you look at when you're trying to get married to somebody instead of dating them for the weekend or whatnot, right? So like to me, that's the beauty of kind of like this data that you put forth. This really well-rounded market that hits all these different criterias is the big reason why, you have talked me into going all in on Jacksonville. Paul, have you ever thought about it this way, bud?
Yeah, I mean, we've taught this for a while. It's great to see the updated data, right, Greg? I love that you're doing this now, which is great because your passion for it is tremendous. And it drives home the point that we're trying to make, and circling back to the very beginning. It's outside in, right? If you find yourself, and it's a normal human condition, it's normal, it's okay. Be nice to yourself. You're gonna have at some point some inside out feelings and thoughts and emotions, right? We all grew up in a house. If we're all lucky, we're fortunate enough to grow up in a house, I should say. So houses have emotions for us. We think real estate is very, very, very local, right? We have feelings about how we want a house to look and where we want it to be and all these things because we all have experience with houses if we're lucky and grew up in a house or an apartment. When you're investing, you put on your investor hat. It's different than your own emotional personal experience hat. It's financial engineering. That's my point here. It's not we pick a house because we like it, and I'm using a silly example, we like the way it looks. more real world example, because someone we trust told us something, or someone, other people have made money down the street. So you want to do the same thing, or your uncle did it this way or whatever. What we're trying to do is get past that and get the unemotional, kind of unfiltered look at the data, and then help manufacture what is my mindset around this data? What am I trying to do? Why does this data matter? Well, if, like Gregg said, you're trying to get all 5 profit centers, right? You have to understand this type of data that Gregg just went through, and then apply it to your portfolio. Pick markets that are above that. It's really nice because there's 99 MSAs out there, right? So if you're 50 or above, you're exactly what Gregg's talking about, right? If you're 50 or lower, I should say, so you're in the 40s or 30s or 20s, it's better and better and better. So you want to pick markets that have the widest swath of winning. You're placing your bets on the widest swath of winning, not going all in and pushing all your chips on one, right? Which is a really intelligent way to pick a market.
Love it. And let's just kind of talk about what it looks like to invest in Jacksonville right now, right? You want to talk through this, GC?
Yes, absolutely. So it all starts with a conversation. So if this resonates with you and you have more questions and you want to start that dialogue, reach out to my team. We do this wealth planning for all of our clients. All of our Fortune Builders passive income students are included in that as well. And we build a wealth plan for you in rental properties. And it all starts there. So I would absolutely encourage everybody to reach out to us. If you're not already a client and you want to get that process started, do that. The way that you can do that is you can go to chatwithjwb.com. You can send a text into that number if you'd like to set up an appointment. A real person, on the other hand, is going to respond to you. It's not an automated service. It's all personalized over here. So that chat number is 904-293-0341. It starts there. When we build the plan for you, we will then populate that plan with assets, single family rental properties that we own. You don't have to go out and find them anywhere. It's all done for you. It's packaged in a very easy and enjoyable experience for you. When you get there, which it's usually a few phone calls until we get there, here's what you'll see. All of these assets fit this criteria. The minimum investment will be about $50,000, and it can certainly go up from there. And that's dependent on which asset we recommend for you. That includes the down payment. It includes the closing costs, all of that good stuff. But just think as a minimum, about $50,000 is where you'll be. The rate of return for each of those assets and for your portfolio overall will be somewhere around 9 to 10% returns. And that takes into account all 5 profit centers, and it's customized to you based on the amount of time that you intend to hold these assets as well. So you have built in this solution to that future problem, and we know it's going to work there. Number one, because we've done this for many, many, many folks before you, but we also know the numbers. And when you perform at 9 to 10% and you hold on for that long, man, you can move mountains. You can move mountains. You can solve big problems. Interest rates are a common conversation right now. We all are aware of interest rates. Well, interest rates for JWB and for passive income clients are a lot lower than what you see typically out there because of our relationships. Recently, clients are closing at about a 5.65% interest rate. So a lot of value there because of the passive income club relationship. And we do have a number of incentives. I thought we would take a couple of moments and just talk about these incentives because these are just for February. February just started, so I'm so excited that we get the opportunity to talk early on in February. Excuse me. So we've got up to $13,450 in incentives, and this is for all purchases in the month of February, meaning you go under contract in February. So again, get on the phone with us and go through that process. And you just have to have the home under contract in February in order to take advantage of it. But the way that you get that type of incentive package is every home comes with a $4,000 to $6,000 maintenance credit. And what this is this is a property management incentive. Basically, we send you a check for the first $4,000 to $6,000 right after closing. That takes that basically pays for your first $4,000 to $6,000 of maintenance costs. So maintenance and vacancy are the biggest pain points. We try to avoid them as much as possible as rental property investors. It's nice for you to have a $4,000 to $6,000 slush fund, in essence, right off the bat, which helps to preserve and increase your cash flows as well. Every purchase also comes with your first tenant placement fee waived. That's about a $1,450 value. Shively, have you heard of us waiving the tenant placement fee? You've seen us work with your students for almost 2 decades now. Have you ever seen that?
I'm gonna get real personal. You didn't even waive that for me, man.
I did not.
Come on, man.
No, it's very timely, and that's why it's such a pleasure to be on the phone with you all here today, right now, because this is just for the month of February. In addition, for those who can purchase 3 at a time, there is certainly an incentive to be able to move a significant amount of capital into this asset class, kind of plan for your retirement or whatever that outcome is you're looking for.
Yeah. For example, we're having folks in the chat talking about how like they're sick of rent controls in California and they're worried about all these rent controls coming down. The opportunity to take a California property, which by the way, is most likely going to be worth about 3 Jacksonville properties,
Sure,
and 1041 them into Jacksonville, you can buy what we call a bundle. You can buy 3+ properties at one time and take advantage of this kind of like multi-property discount.
absolutely. So if you purchase 3 or more at one time, you get an additional $4,000 to $6,000 paid towards your closing costs. And this is per property for all of these incentives that I just shared with you. There is no limit to the amount of properties. You can't possibly sell us out because we're vertically integrated and we have hundreds of properties in our portfolio to make sure that they're available for all of our clients. So,
Got it, GC. And of course, that next step is, again, this is a service you've already paid for, right? Like talking to an expert at JWB that helps you figure out the outcome that you can create and the why, and then builds a plan for you. You got a bunch of different ways to do it. You can call them right now, 904-677-6777. You can just text 904-293-0341. They'll send you this presentation. They'll set you up with an appointment, or you can just go to chatwithjwb.com, pick a time that works for you. Easy peasy. And if you like this stuff, you like this type of information, you like what we're doing here, we show up here every Tuesday. We do what's called the Not Your Average Investor Show. It's a podcast. You can find it on your podcast platforms. You can find it in YouTube. But if you like hanging out with me and GC over here, we got a lively community that gathers around every single year. We got a big event coming up here.
we do.
At the end of February. We're going to have 100 or so coming through, and we'd love to have you be a part of it. It's a lot of fun. But yeah, what do you think there, Paul?
I think it's great, man. I love educating the investor group. It's fantastic. I love it. It's why I still am involved in Fortune Builders. It's why I'm still here. It's why I wanted to get invested in real estate and really myself, but also I was so excited when Tham initially 15 years ago was like, hey, come on, start this idea with us, right? Is for exactly this, right? How can we help investors be more educated and make better investment decisions, right? And this is the rubber meeting the road on exactly that. So Gregg, I really, really appreciate you bringing this to our group, bringing it to the Fortune Builders community, bringing it to the Passive Income Club. So thank you, my brother.
My pleasure, man. I mean, this is what we all love to do. It's a pleasure to be so fired up to do something like we all get to do, the 3 of us get to do, and to share it with everybody. I mean, what a blessing, right? To be surrounded by those who share that same passion with you. So thank you all for being here. It's been a nice 45 minutes to an hour. And, I really sincerely hope that we delivered on the value for you and that you're a more educated and soon to be more successful investor because of it.
Yeah, love the questions, love the feedback that we're getting in the chat. I commend you all for taking an hour out of the middle of your workday to get educated on real estate. Again, take advantage of this. Call JWB 904-677-6777. Shoot us a text 904-293-0341, or just go to the website chatwithjwb.com. Pick a time that works for you and start figuring out that outcome that you want to create. Right? I did it.
Yeah,
you did it. Paul did it. Paul's dad got that outcome, right?
Living it, baby. He's living it. He just retired. He's living
And
it.
yeah, we do this once a month. We show up every Tuesday and do the show, and we always have one final piece of advice. What is that, GC? Don't be average. See y'all next time.
See you, everybody.